Hey guys, what's up? This is Stock Retail coming back to you. Just a little joke here in the title, May 2 Part 2. Obviously, this is May 3rd already. Yesterday I had said I was hoping to post this, but got a little busy. If you follow me on Twitter, then you might have seen my mom had back surgery, so I was helping her. A couple of the kids needed help with math, just normal stuff, being a son and a father. And so life goes on. Here we are. I'm excited to talk about this today, something I've kind of hinted at talking about for quite a long time, both just sharing my view on where Q1 landed. Uh, Obviously, we're all forecasting and guessing here, right? So I'm going to give you numbers, but there's going to be plenty of those that are going to end up being wrong. Um, but what I want to share just more directionally as well is not just the Q1 landing, but where are we headed? How is Q2 tracking? And in particular, both on Twitter and YouTube, I've seen some FUD out there about AMC CASH, and so that's just going to be great to address too. And as always, I just want to arm you guys with education. Have a bit of a business background, and so I like to just try to share with you what I see and hopefully teach you to start doing that for yourself too. So let's just dive into that. What we're going to talk about today, I'm actually going to kind of start out with Q2, then I'll talk about the cash flows specifically. That's just been a real hot topic. Some folks tried to spook you, especially around the settlement, and if that's dragging out at all, and kind of what does that mean for AMC Cash. So that's another big reason that I want to talk about this as we have Q1 landing. I kind of see, look, I've been here shared with a lot of you. Some people, for some reason, fixate on when this YouTube channel started, but you've got to check my Twitter. It goes all the way back. I've been in AMC since actually December 2020. Really was not understanding what a squeeze was at that time. As January happened, that's when I started to learn about the squeeze. I've shared this story before, so I'm just going through fast, but you can check my Twitter for kind of the receipts. I deleted that account because I realized this was an opportunity for people to unite and cut across a lot of lines. And I had had an account before that that was a little more political in nature, and so I got rid of that account. Started my Twitter account in February of 2021, so go ahead and check that. So before some folks come at me, which interesting, kind of had some people try that recently. I don't know. Do your DD. We say do DD. You can do DD on people too. And I am who I say I am, and I've been here a long time. So go check that out sometime. But the point is, because I've been around a while, often now I can sort of read the room and see FUD developing and what's going to be happening. And that just comes because we're networked, right? We talk to each other, we share stuff. There are people who share things with me, and so I get kind of sort of sightline into some things that are happening. Well, the latest round of FUD that I saw developing in particular last week through sort of the settlement discussion and then into the weekend was just really around cash flows. So I want to just arm you with facts so you understand, because you're going to get the Q1 earnings, as you know, on Friday, but that's going to be a number. It's like a landing number. It's a point in time static number that would be as of the end of March. But we just finished April, right? And what April did we finish? Well, we're going to talk about that, but just to kind of tease that out a little, we just had the third biggest April at the box office of all time. Forget pre and post COVID, I'm talking all time. So, we had a month that was the third best April of all time. Sounds pretty positive, right? So we're going to talk about that. All right. So some punchlines. First of all, I'm going to give even my earnings forecast. Now, there's a lot of plus and minus to this. I could be wrong both to the upside and the downside, and that's usually what kind of like a stock analyst will do, is they'll more give a range and you get to kind of a consensus forecast. But I'm giving it to you right here. So bottom line, I'm saying maybe about $150 million loss on the quarter. By the way, that makes that the third best post-COVID quarter yet. So in my opinion, we're moving in the right direction, especially when you consider this was a Q1. I'm going to go through a lot of details on how to look at Q1 versus last year, what's better, how I landed at this number. So we'll get there. But just keep in mind, and Adam has shared this in past earnings calls, Q1 is always not always, but almost always the smallest quarter of the year. And this year that proves true. If you look at the timing of what movies are coming and when they're going to be in theaters, Q1 was absolutely our smallest quarter. And I'm going to look at a little bit of history in a minute too and show you that that's what I've been pointing at for a long time. But now look at this second bullet. Keep your mind on the fact that Q2 is looking fantastic, like amazing. Clearly the best post-COVID quarter ever, and it's not even close. It's like far and away better than any other post-COVID quarter. Um, and what's more, just like I said, April was basically the third best April of all time. May and June look very similar, and we'll kind of talk about that a bit. I think that cash ended Q1. I think we landed with more than $500 million. Now, if you're on Twitter, you've seen Adam's tweet that, what did he say? We have a sizable cash position. Certainly more than $500 million is sizable. And so I'll kind of talk about that too. But then what I'm saying is, I believe April already has been cash flow positive, and the rest of Q2, and really probably even the rest of the year in total, is kind of cash flow positive or flat if you maybe add all three of the final three quarters here. So, I mean, that right there, we can almost stop and just say, listen, anyone telling you that you need to worry about cash is not really thinking through how the business is doing now. And I think that's a distinction I really want to draw for you, that you're going to get from Adam on Friday a backwards looking view. It's going to show you what cash we had at the end of March. Now, he's already said that was sizable. And so, if as of the end of March we already had this sizable cash, and then we just finished in April, that was the third biggest box office of all time, I think you can kind of understand, like, hey, we just raked in a bunch of cash in April. And I believe that was cash flow positive. But, because we don't want to have Trust Me Bros, I'm going to kind of walk you through the details of how I get there. First, as I've been kind of showing you, this is our full year view so far, calendar year 2023. So this includes both Q1 and Q2. And you can see as of now, it's a little more than this actually. We're more than $670 million at the domestic box office ahead of last year. We're not even halfway through the year, right? I'm projecting, well, actually, let's get to that. So you can just see how steep this line is too. I've trolled Shorty with this a few times. Like, this is not the direction of an industry that you want to short. This is the industry I'm showing you, not just AMC, the industry that AMC's in. You're invested in a movie stock. Here's how movies are doing. This is a very steep up and to the right. This is a weekly view, and you're just seeing how much farther ahead of last year are we getting week by week. That's what this line is showing you. Pretty amazing. But it's going to keep going, right? So I've shown this in other videos. You've kind of seen this. Obviously, we're about to hit Guardians here if you're looking on the screen. And then we just keep rolling. Look at all the really big movies that are coming out. Look at the great mid-sized movies that are coming out. There's a reason for bullishness in the movie industry right now. And then we go out through, so I'm just showing you to the end of this quarter, because this all feeds into why do I feel so good about this quarter. And you can see that I believe by the end of the quarter, so if I showed you a minute ago, and I'll just go back, as of basically today, we're almost $700 million ahead of last year. I'm saying we continue to pick up steam through the rest of the quarter and keep gaining ground on last year. We're getting farther and farther ahead, which means we're making more money. And keep in mind, a higher box office, it's not just about ticket sales, right? That means more people also are coming, which means more food and beverage sales and more merchandise sales. So we're going to talk through that as I go through the numbers. But keep in mind, I'm saying by the end of Q2, I believe, again, it's a forecast, that will be almost $900 million at the box office, just the domestic box office, ahead of last year. That's a really big freaking deal. So let's talk Q1. And first I just want to show you, kind of interesting, if you look, this is actually the first video I ever made. So I just thought, you know what, fine. Someone wanted to kind of come at me today for having a YouTube only since last September. But interesting that the first video I ever made, actually what happened was last summer, if you recall, we started getting trolled on cash. Here we still are talking about cash, right? And I was getting actually pretty upset at the lies I was seeing out there. I truly believed they were lies. That's about the time, well, I won't maybe name names at the moment, but there were some, let's say, pretty significant detractors of AMC, let's say some banks, and let's say some media outlets who were saying AMC's cash was going to be a real problem. So I just said, you know what? As some of you probably know, I have been tracking literally every line item of every income statement and every balance sheet. These are things that get published. These are the earnings, the income statement and the balance sheet. And I've been tracking every line item of all of these clear back to 2018. And then, I've told you all I have this kind of background in forecasting. I guess I have a lot of new followers the last few days, so forgive me if you've been around a minute. I'll just kind of repeat. I have a couple of master's degrees in business. I worked at a Dow Jones level company for 21 years. I was actually leading forecasting of business, so I have some background in that. And now, add to that, I've been tracking the movie industry day in, day out for a few years. Doesn't mean I'm right, but it does mean at least I have an informed point of view. And that's something else I've been saying to you guys lately. Pay attention to the people who get stuff right and the people who get stuff wrong, and start assigning credibility to the right voices. I'm at the point now, all people equal 100%, but not all voices equal anymore for me, because I'm really tired of people who cause confusion and chaos and problems and drama and negativity. I'm just not listening to those voices. And I would just say you have to decide what voices you want to listen to. So, really interesting. The first video I publish is addressing FUD about cash. And what I said, so that's, you can see it's 7 months ago, I said we were going to turn cash flow positive in Q2 of 2023, right now. And so far, I feel like that's still correct. And so you can see what I was showing here in this video, like I said, clear back from last September, was, and I've been saying this on Twitter since before that, so you can go find all that. But the point is, we were going to bottom out at the end of Q1. The reason I really want you to know that, here was 7 months ago, I was saying, don't worry, we're going to bottom out at the end of Q1. And even that bottom out, you can even see 7 months ago, I was saying we probably had about $500 million of cash. So far, I think that's turning out to be accurate as well. So interesting that, because honestly, I wouldn't have expected to be that accurate. But we'll go through, and frankly, Adam may come out Friday, and I'm going to look silly, and maybe I'm wrong. So let's not brag too much yet. Let's not dunk before it happens. But either way, what I said is we'd bottom out at the end of Q1. And the reason I want you to know that now is, if we had cash burn in Q1, and I actually think we did. I do. I think we still had some negative cash in Q1, but I was always okay with that, even 7 months ago when I was telling you. And the reason was, one, we still have plenty of cash. Think about Adam's tweet, sizable position. I would agree with him. We have a sizable position of cash, and I think we're done. Guys, I really think we're done burning cash. I think we're moving positive here. I'm using that word think, I'm using that word forecast, so you're going to have to decide if you agree with me. But you can go to plenty of my videos where I go through the details on what has changed in the business and why that's better now. Also, just interesting, if you're into any kind of numerology or not, I don't tend to be real into that, although it's just something fun, I guess. But without any intent, somehow that video was 1 hour, 11 minutes, and 11 seconds. A lot of ones, and so that carries some significance for some people. I just thought that was kind of funny, and I'd share that with you. All right, but so 7 months ago, I said we would bottom out at the end of Q1, which is what Adam's going to give us the numbers from on Friday. I said we would go cash positive in Q2. I just told you how April was the third biggest April of all time, so I feel like that's holding true. And so within that context, let me also now, before I kind of sort of land the plane on finishing talking Q1 cash, some of the people I heard talking about cash out there, I'm just going to be real, they have not gone to the level of detail that I think you need to go to understand this business and what's different in Q1 that is, from last year. So if you're going to look at last year and say, well, we burned this much cash last year, and so therefore I think we'll burn this much cash this year, you also have to look at what's different. That's what you do in forecasting. You've got to see what changed so that you can understand the delta in your numbers. So let's go through these. First of all, if you don't know, Q1 of last year, there was a one-time cost, $136 million cost. So our total free cash flow last year was a negative 330. You can just see this first bullet here. But a huge chunk of that was a one-time cost. Okay, second, the domestic box office last year was this 1.3 billion. This year for Q1, it was 1.7. So the box office itself was up 28%. And I've already reminded you, think through that means there's increased attendance, which means there's more food and beverage and more merch sales. Okay, so keep that in mind. So speaking of food and beverage, think about those Adam tweets we've seen where it's like, hey, this last week we had the all-time high in food and beverage spending per person. And then another time he said, hey, this last weekend we had an all-time high for a weekend for food and beverage spending per person. So the amount of people that's come has gone up, and the amount that we're spending per person has gone up. That's like a multiplier. Interesting, I talked a lot about that in my first video, those 7 or 8 months ago as well, these multipliers, and called that out and predicted that. Okay, currency impact. So you got to understand, remember, we've got Odeon, we've got theaters all over the world that are owned by AMC. So when, like say, the euro goes up or down against the dollar, that changes what AMC's earnings are, because you translate earnings into sales for an into dollars for your, you translate sales into dollars for an American company. Same with expenses. But anyway, so the point is the euro is just barely down versus the same time last year. It's basically flat. And well, I won't get into an FX discussion here, but that's something so that you know that's a level of detail that I'm thinking about in my forecasts as well. Where is the euro in particular going against the dollar? Um, Merch. So remember, I'll call your attention to like the Ant-Man buckets. Remember that day when Adam said, I forgot how many we sold, but it was, I remember doing the math that day, and I think it was like $660,000 worth of just Ant-Man, just popcorn buckets in that one day. And then think through too, remember in Q1, that's when the merch went live. So all the blankets and coasters and t-shirts and hoodies that you all bought and that I couldn't chase down, or not coasters, tumblers, because that's the one I've said on a bunch of videos too and on Twitter. Like, I really want a tumbler to drink my coffee in the morning. Uh, and you guys keep buying them out before I can. So there was some and extra revenue in Q1 of this year that we did not have last year. Merch is up, is all I'm saying. Popcorn went live. You guys all know that story. That's been a whole lot of fun. Now, here I want to just caution. First off, we know it only went live in what, like 500 stores or whatever, and we also know the volume just wasn't totally there. Like we just gobbled that stuff up right away, and it was the shelves were empty. So then there's also a lot of days with kind of no sales because there was no popcorn to find. So, I'm being cautious in how much I think there was. And then on top of that, I've got to imagine, and we'll hear from Adam on Friday, that perhaps sometimes the way accounting works is a lot of your ramp up costs may be up front. There's something called amortization and tooling. So, like as they built up the factory to make the popcorn, they may spread that out over future shipments in terms of the expense. But there's still got to be some ramp up costs. I'm sure there's some marketing and some deals with Walmart and who. So I'm not yet ready to say popcorn was some big amazing thing in Q1. Love to find out how that was. I'm sure Adam will update us. Um, but it is different year over year. So we did not have that last year. We have that this year. Borrowing costs. In the year between, if you don't know, we paid off like $300 million of debt. That is not a small number. And then you got to understand you have these interest payments. So the interest payments are less. On top of that, remember he refinanced the Odeon debt. So there's some debt out there, and I've got like all the totals. I'll share that in a minute too. Where overall the percentage rate across all the different buckets of debt, you call those tranches, the percent rate, like the blended percent rate, is lower than last year. So we have less debt and a lower interest rate year over year. So that also impacts your cash burn. Then Highcroft. Last year in Q1, we had a $63 million cost. Obviously, this year, that may be different. Well, it is different. And so you get into some counting of how Highcroft stock is now reflected in the books, but there's certainly not a $63 million hit. Basically, if the stock goes up, it'll show up as income. If the stock goes down, it'll show up as an expense. I didn't check before this video, but I think Highcroft was kind of down in the quarter. So there's probably a little bit of expense there, but it's not 63 million. So there again, you're better quarter over quarter. And then there were property shifts year over year. So like last year, Q1, we did not have the Topanga property open. This year you do. So that adds to like AMC's market share, more food and beverage sales, et cetera, et cetera. So this is the level of detail you got to go to really understand what might be different year over year. And the reason I share that is, I don't want people scaring you with, well, last year we burned $330 million in the quarter. Well, I just showed you in particular, if you look at that one-time cost, that $136 million, that doesn't show up in any quarter really ever, other than last year's Q1. And then this Highcroft investment right there is like a $200 million shift. So you can understand, and then if I talk through the rest of the business that changed, why it's significantly different. So Q4, we ended with $654 million of cash. Q1 forecast, I'm saying if you, so remember there's also ape sales. So that's this kind of first bullet in the second section here. There were some sales of ape, which would be cash raising, right? You're raising cash. So there's a burn in operations where it cost us money because the domestic box office, or the global box office, wasn't big enough yet to make a profit. By the way, you guys all know, I believe Q2 will be positive earnings, like profit at the bottom line. Just a forecast, we'll see. But anyway, so there were ape sales that would add to cash, and then you've got the operations that I believe probably burned cash. And my number comes to about 60 million that we would burn. So we go down $60 million in cash, but we came in with 654. That's an actual number. That's from the Q4 earnings. That's real. Then my forecast is just the lower part. So that's why I'm saying we land at 595 million basically. But now, just kind of disclaimers here so you can see them on the page as well. But if there's any surprise investments, like somehow I didn't realize there was a cost to like buying a new property or just something we don't know about yet, if there were sales that I don't know about, sometimes they cut loose a property, or I don't know, there could be other things that I'm just unaware of. We talked about popcorn ramp up. Were there expenses that are really front loaded and I don't know that model yet? Are there other one time expenses? Last year in Q1, that was a surprise, that one time expense. So all of that could throw this number way off. So, you cannot take my number as, you just can't take it too seriously yet. We're going to hear from Adam on Friday. That's coming soon enough. But the real point is, there's no way we burned $654 million. I was planning to say that, and frankly, Adam's already said it, right? So you've got his tweet. Just go by that. Whatever Adam says, you already know is correct. He's got the numbers. So we have a sizable cash position. That's the point. Kind of going back to that same graph I showed you that I did 7 months ago. It's basically still the same. I've just shifted because some movies have shifted around. And I just want to show you, so as I said, if we kind of bottom out here at the end of Q1, I believe Q2 is cash positive. And then you could see, you could almost kind of draw a line all the way across that for the rest of the year, we basically stay flat. Now think of that from Shorty's position. You got cost to borrow, you're stuck in this position, banks are melting down all around you, liquidity crisis is hanging over your head, and here AMC's got over $500 million, and it kind of looks like, at least for the next 9 months, could kind of not do much of anything and keep that position. So AMC is going to be sitting flush with cash this whole time. Meanwhile, you're burning cash to hold your position. What an irony, guys. Who's burning cash now? Shorty's burning cash, not AMC. Really great position for us to be in. And then you can see I just made this final number all of FY24. I believe FY24, based on the movies I'm seeing out there, based on the direction of AMC's business, I believe FY24 is total for the whole year positive on cash. So I'm just really wanted to separate out for you guys, and I've gotten some questions on this on Twitter in particular, the difference between where we'll land in that past view in Q1 and the difference of where we are now and where we are looking to be going forward. So when I talk about that we're at positive cash flows, I'm not talking about Q1. I'm fully saying I believe we're going to see negative cash from Q1. However, we're not in Q1 anymore, are we? Here we are in May. Guardians is coming out, right? So live in the reality of the now, and cash flows are basically real time. That register is ringing. There's stuff going out the door and stuff coming in the door every day for AMC. So that's something you should celebrate, because if right now we just finished the third biggest April ever, I'm going to show you actually here why it's pretty clear. Oops, this is like totally the wrong direction. All right, we're going to do this without animation. That's my bad. Okay, pretty clear we made money in my opinion. And just sometimes you just got to say something out loud. So let's just look at this. Did you know we have had one quarter post-COVID that had positive cash flows? So there's two numbers you see. Look at this top row. Cash from operations and free cash flow. In Q4 of 2021, think Spider-Man. That's when Spider-Man came out. We had cash from operations, basically by opening the doors and bringing people in and selling merch and selling food. AMC made $47 million that quarter. These are actuals. You can fact check me on this. You just got to go pull up the earnings from that quarter. Okay, free cash flow that quarter was $8 million. Pardon me. Free cash flow is kind of a metric in accounting, and it's just used to sort of, how can I put it, see whether you're able to kind of leverage the cash that's coming in and out. And it's very good to have that be a positive number. It's a good thing. Q2 now, obviously I'm saying TBD on that, all right? And by the way, the asterisk, any number you're seeing in Q2 here is a forecast. Okay, now, keep this in mind. Q4 of 21 was positive cash flows. Now let's compare the current quarter to that quarter. We had a quarter that had positive cash flows. How does that stack up against where we are right now? Well, that quarter, the domestic box office was just over $2 billion. I'm forecasting this quarter, the domestic box office, to be almost $2.8 billion. That's a 34% increase. So right there, guys, just say it out loud. We had a positive cash flow quarter, and this quarter, the movie industry is a full 34% bigger than the time we had a positive cash flow quarter. And you start to see how I'm arguing with facts that I believe Q2 is cash flow positive, and that means April probably was cash flow positive. that we just finished. That means if AMC didn't go bankrupt at the end of Q1, and we already know, duh, it didn't. I'm looking at you, Robinhood. If the AMC was not bankrupt as of then, and if April was cash flow positive, you don't have to be versed in math or finance to understand we have more cash now than we had then. We're moving in the right direction. We're good. Okay, let's keep going though. That quarter we had positive cash flow. Europe had COVID headwinds. This is the Omicron days. Europe was actually not fully opened, so that means AMC's attendance globally was lower than it is now. I just showed you the domestic box office growth. That's just US and Canada. So now think about if the domestic box grew 34%, what is the global box office growing? It's actually more than that 34% because Europe's growth Q2 22 versus Q4 21 is going to now outpace the US and Canada's growth. So it's even more attendance, even more food and beverage sales. Our Europe teammates are going to see even more growth versus that quarter that we were cash flow positive. How about debt? Look at debt. We were at almost $5.2 billion in debt. The total debt was averaging about 7.8% yearly interest across all those tranches of that debt. How about now? Did you know that you can see about $300 million lower in debt now than then. So that's less interest you got to pay. And the total interest rate is lower. You can see that here. And did you know actually that I kind of didn't finish there? We have lower debt now than pre-COVID. I bet a lot of apes don't even know that. Shorty's expecting you not to know that. So great fact to know. You can go fact check me on that. Just pull up the last earnings, the Q4 earnings from 2019. You can go fact check that. All right, food and beverage per attendee. In that quarter that we had positive cash flows, it was $6.38 per attendee. Now remember Adam's tweets recently that we've been hitting all-time highs. I've got, remember, every quarter all the way from 2018. I know what the all-time highs are. And so I've got a forecast here of basically $7 a person for the quarter. And as I always say, I could be wrong, right? But we just know it's something a lot higher than 638. So we don't have to argue about the right number. We just know it's far higher. So back then, we had less people, less movies, and less spending per person than we have now. And we made positive cash flows then. So you're just hearing item after item after item makes now better than the quarter that we hit positive cash flows before. You can see here the movies, 130 versus I'm forecasting something around 195. That's a harder number for me to forecast, but we're kind of tracking somewhere around there. So it might actually, I think, potentially end up being higher than that. We're going to see. Okay, popcorn. We had no popcorn sales outside of in the theater. Now we have the mega bag that got added since then. Don't forget, we actually have Uber delivery of AMC popcorn that didn't exist then. And then we have the Walmart sales that not only, because we're in Q2 here, so that's not just the 500 stores. We're up to the 2,600 now. Pretty significant difference, right? And then we did not have the credit card then. We have it now. So just everything on the right is far better than what's on the left. And what's on the left was a positive cash flow quarter. So you tell me if it seems like we might have positive cash flows this quarter or not. Right? So don't be gaslighted. That's my point. Okay. Now that wrong animation. Moving forward. All right, so I'm going to move off of numbers. I want to talk about something that's just really ramped up for me in the last week and a half or 2 weeks. I just see all-time highs in FUD. I see all-time highs in people attempting to be negative, draw people into drama, control voices, controlling what you say, manipulating things, confusing things. I did a video a long time ago. You can kind of look up the whole Tigers and Frogs video. I think it might be also about tokens. I don't quite remember the title. Kind of gave a history that led up to FTX. And by the way, again, about people who knew and people who have credibility, you can find on Reddit. I wrote about the tokens, I think, like a year before the whole FTX meltdown. So there are people who knew this stuff. And I was definitely not alone. There are other people who even helped me know some of that. But here's the thing about influencers, and the reason I use this picture. What's behind the camera, right? So this is someone who probably posted this on Instagram or whatever and made it look like she was lying in some tropical pool full of all these flowers. When in reality, she's in someone's backyard and everything is staged. Nothing about this is real whatsoever. But you're led to believe something. And I said in that video, and I'll say again today, if I was hedgy, I would use influencers to get to your mind and your heart in order to get to your wallet. Okay? I said it twice then. I want to say it twice again today. If I was hedgy, I would use influencers to get to your mind, whether that's confusion, whether that's doubt, whether that's misdirection, and I'd want to get to your heart, whether that's negativity, depression, fear, anxiety. Okay? I'd want to get to your mind and your heart so that I could influence what you do with your wallet. So you need to do DD. There's a reason we say do the DD. There's a reason we say don't trust me, bro. And more than anything, guard your mind, guard your heart, think through who the voices of credibility are, and even then, don't just trust. Do your research, do your homework, ask if something measures up. And then the other test that I've always said since the beginning of this whole journey, told you on Twitter, I've been here the whole way, and since I've come to YouTube to try to share some things, and you can actually see the genesis of me on YouTube was fighting financial lies that I saw, because that's my background, that's what I can provide for apes. What I have always said is, you cannot be fake forever. Who you are on the inside will come out on the outside. And for those of you who seek to troll me, I'm saying this to you too. I'm basically looking at you. Who you are on the inside is going to come out on the outside, and I'm going to see who you are. And so are apes. So the line I always say is consistency over time, guys. It is not possible to be fake forever. So if someone shows consistently their character, I'm not talking about having a bad day, getting grouchy, everybody's got to apologize for something somewhere. There's 4 million of us, we're not going to get along all the time. That's okay. Let's be people and let's ride together. I am talking about, well, that's really weird. Usually they've been pro AMC. Why did they say all these negative things all of a sudden? That's really weird. Why did they just throw shade on some really good DD? That's really weird. Why did they just say all these confusing things when it's really obvious they aren't true? Consistency over time. If someone isn't being consistent, it starts to smell weird. And if it smells weird, 9 times out of 10 in this AMC journey, I've learned it is weird. So, I don't know. Just head on a swivel. Don't be influenced. Don't let them get to your wallet. You make decisions that are right for you. That's my point. So, bottom line from this video, we landed Q1 with plenty of cash. Adam has confirmed that, so we know for sure that's true, but that's also what my forecast said. So it's kind of doubly confirmed for me. I think we're good. Q2 is looking just phenomenal. Plenty of fundamental improvement, but that massive box office growth, which also represents the merch sales, popcorn exploding, no pun intended. Q2 looks really good to me. The future outlook looks even better, and apes are strong. So I just want to finish with something I used to tweet a lot back in the early days in 2021. And I want to just kind of share this with you and just kind of ask you to absorb it, because I think we're in sort of a volatile time in terms of FUD, and this is just worth remembering. Cool heads, calm hearts, diamond hands. You got this. Let's go.